they're running a risk here. There is a liability shield on the central bank. That's to say, you can't sue the central bank.
Yeah.
But that's no longer really operative in given the fact that they're agents for the EU now. They are actually an EU agency.
That's fascinating, of
Yes.
course, yeah. So, can I just stop you there? Because I think that's a very, very important observation, right? So the central bank have been basically part of the ECB, right?
Yes.
Adjunct of the.
Well, before that, they were just the Irish regulator.
But listen, I was around when there was no regulation, right? And then there was IFSRA, which fell apart.
There was never no regulation.
It was the ugly.
Well,
it was self-regulation. It was self-regulation.
Self-reporting, yeah.
And then and all of that. It's all ancient history now, I know. But I mean, so the central bank are stepping out of their normal channel and are becoming an agent of the EU in terms of as the regulator of this new directive. Mm-hmm. And this new directive, is that for all contracts from the end of last year forward, or should it be backdated to cover everything, all the work in progress that's there at the moment?
My view is that in relation to European law, you don't necessarily take the actual wording of the clauses. You actually have to read the 50 or 60 preliminary paragraphs which describe what the tribunal or what the Commission is trying to do.
The principles of it.
Yeah, principles of it. Yeah. And there's no way that I think if you were to take issue with the central bank and they were to come back and say, no, that doesn't apply to a mortgage which was only created in 2022 or in 2018 or something like that, that would really wear it in Brussels. They would take a dim view of that. They'd say, really, all the bank's dealings with arrears should now be covered by a general principle that we're trying to get these borrowers who were badly stung back online, because that's in the best interest of banking.
But is it your opinion that the central bank don't want that they're reluctant to have that interpretation of the
principles?
Well,
I don't know. I asked 20 questions. I'll give you an example of one here. This is fairly technical stuff. I can highlight one there. So I said...
this is a question to the Governor of the Central Bank?
Yes.
Right, okay.
Well, I gave it to the committee. I said, you give them to the Governor of the Central Bank and see how he has to play. So I've got if an originator retains risk or has derivative or loop-back proprietary trading settlement exposure, will the tax avoidance it has booked be factored in calculating the consumer's net position? That's one. Here's another one.
Okay.
16. Will the templates...
That's a very hard question. Go on.
Yeah. Will the templates... But they should have an answer.
Yeah, they should, of course. Yeah.
Will the templates of factors for cram down in the Insolvency Act and the 2009 and SCARP legislation for SMEs be regarded as persuasive in assessing proportionality? Now, this is EU stuff. Well, they got the answer. The Finance Committee got the answer from the central bank. It said...
Was this recently?
Yes. April they got it.
Okay.
They said the central bank must have regard to the particular facts of each scenario when exercising its supervisory functions. Please be assured, the central bank is fully cognizant. Sorry?
Yeah.
This is the reply to 20 questions?
Yeah.
The only thing they got out of that was they acknowledged that they have to look at each scenario. That is a breakthrough. They now have to say, last year we examined 1,000 scenarios and this is the pattern that emerged.